Good morning and welcome, Patriot Radio News Hour. I'm Joe Jaquint, CEO of the Patriot Trading Group, and welcome to Thursday, 800-951-0592. That is our toll-free number. Of course, the physical delivery of wealth insurance. Something you can feel in touch. Something that's coming to an end when you talk about cash, coins, the Federal Reserve note, really all currencies around the world preparing to go digital. AllAmericanGold.com is the website. And I'm joined, as always, with my partner, Jason, in Colorado. And Jason, another busy day today. We had jobless claims. The European Central Bank raised rates. We had a first look at third quarter GDP, and we also had durable goods. So we had a lot of data out today.
Well, it should be a lot to talk about for sure, Joe. We'll trail down that road and see what you have to say, and I'll respond. It's just a good time to buy gold and silver. I just feel like these prices that we have, even though they seem unusual with these high premiums, it's getting ready, Joe. I think next year you'll be happy you bought this year for sure.
Oh, there's no doubt. Listen, we got a lot of things breaking. I guess we could start with yesterday. Canada, the Canadian Central Bank, they only raised 50 basis points, and that got, and again, the equity markets want to pivot. They want any decrease from 75 basis points is going to be viewed as the Fed giving in. This morning, the ECB, they raised 75 basis points, and I want to point something out. So the European Central Bank, the ECB, their rate is now at 1.5. Okay, so we're expecting 75 basis points on Wednesday to get to 4. The reason why I bring that up is because the UK 10-year note is at 2%. So it's about 50 basis points. And again, just so you know, a normal, healthy market, you would have a 10-year note roughly 2 full points above the Fed funds rate. So even though it's a half a point above, that's not the healthiest of markets. But today, the U.S. 10-year note, 3.93. Now on Wednesday, everybody's expecting the Fed to raise 75 basis points and essentially we'll be between 3.75 and 4, and I think the official number is going to be like 3.9. Jason, something is very, very broken here, and I'm trying to figure it out. People are, and what's happening right now, people want to believe in I'll guess they want to call them experts and whatnot, that the Fed is going to chicken out starting on Wednesday and speculating that the Fed may only go 50 basis points on Wednesday.
I don't think so. I think it's 75 basis points, but I guess we'll see, Joe, right? We'll see. When people don't want to buy these things, of course, it's going to be a tougher situation. You've said it to me off air a couple of times. You just can't believe these numbers they're not making sense to you, and you're wondering, is it really going to go where it looks like it's going? Which is, the Fed fund rate might be higher. Maybe it's going to happen, Joe.
Yeah, and again, the Democrats now are out there complaining about Jerome Powell. They're out with a statement this morning saying it is important for the Fed not to overreach and trigger a recession unnecessarily as part of its efforts to bring inflation down. And again, it all sounds well and good, but they have no idea what they're talking about. They truly are financially illiterate. Thank you to the education system. This is exactly how they want us to be. They want us to be financially illiterate. If they don't bring inflation down, we're going to be stuck with it forever. You turn yourself into Argentina, Jason.
Right, Joe, and it could get worse, and that's why we're looking at a possible global financial reset, because that's what happens instead of having hyperinflation of Weimar Germany, right? I mean, they can't have Weimar Germany, Joe. So short of that, there's going to have to be a reset. So they'll try every trick in the book to make the numbers look right until that moment of the digital currency that gets rolled on through the world, right?
Yeah, and jobless claims. 217,000. Not enough.
Nope.
Now, a lot of companies this week have announced layoffs. Siemens, 3,000. Credit Suisse today, 9,000. Even some of the other companies, who was it? Zillow saying, hey, we're laying off another 300 people. But still, few and far between. 217,000 still points to more rate hikes. And then last but not least, GDP. Now, this was the first look. We'll get two more looks at this as more data comes in. But just like I warned yesterday, it was actually even a little hotter than I thought. 2.6. It actually was 2.5 and change, but rounded up 2.6 on the GDP reading. And Jason, all of it was just what I said. We had all of this product come across, hit the ports. The trade deficit fell. All this inventory growth, it accounted for 2.8. So if you took away that, you would have had a negative number. But here's the reality. We're going to get a very ugly fourth quarter number. So, it all works out in the wash, but not what the Fed wanted to see again today. We'll be right back. 800-951-0592. So third quarter GDP, a positive 2.57. We'll call it 2.6. Every last bit of it. By the way, they did revise last quarter down 0.6%. Q1 down 1.6%. You kind of add it all together, and you almost get zero with this 257 number. But the problem was inside the number, all the product, when the supply chain that came crashing in here added 2.8% to the GDP number. Which is kind of what I warned about yesterday, Jason, all this inventory. But here's how quickly things have changed. And it'll be interesting because this quarter, third quarter, July, August, September. July and August, the numbers were huge. The container numbers out of California, out of Long Beach, they were massive. In September cargoes fell all the way back to find a number that matched what we saw in September of this year. You had to go all the way back to 2009. And the problem is the October numbers are even worse. So, Jason, this is going to be one of those kind of garbage in, garbage out. But garbage in, it still says GDP 2.6, which, once again, jobless claims only 217,000. Right? It doesn't bode for this. And again, they want to believe it. And if it happens, I'll tell you this right now. If the Fed only goes half of a point, gold and silver, the bottoms are in. Get ready. Katie by the door on that. But I just don't believe that's what they're going to do, but we'll see.
Well, Joe, is there some money we don't know about floating around, keeping things humming along just for that specific time in which they want it to go? I mean, because sure sounds like GDP going up and Biden walking around saying the economy is really great. Sure seems like they know something that's not in these numbers, Joe. Something that's floating around there that, because I'll keep going back to that FOIA request. Hey, the bailout in 08 was, $5 trillion, and we come to find out it was $29 trillion. I just feel like, Joe, that they have to fight the inflation, but at the same rate, if they can secretly stuff some money where it's not going to inflate things, because if they did $29 trillion back in 2008, 2009, 2010, they didn't have the inflation we have now because the money didn't go anywhere. It went straight to the banks and fixed things. This time around with the coronavirus crash in 2020, that money went directly into the market. They just injected a ton to get this inflation up and running. So, Joe, I feel like we're having a rate hike increase to keep the inflation at a certain level, and then I just think there's money floating around, Joe. I just think there's a ton of money still floating around that we don't get to see where it's going. I mean, they're talking about giving money printers to other outfits like the Treasury, these big banks. I mean, it's such a fraud and such a lie to the public.
Yeah, and again, it just goes out, and this is going to be the problem. What do you want? You tell me. Do you want to have 20% food inflation every year? Because that's what it's going to be. A pivot here. Forget about $4 gas, $5 gas. It's going to be $6 gas. And already, unleaded gas futures, I just checked it in. Crude oil's back to $90 a barrel, and Brent's at almost $98 a barrel. And in the unleaded gas, now, the future's now back to $3, which that means for most places that don't have refineries and oil in their backyard, that puts unleaded gas well above $4. Of course, here in Phoenix, we've been closer to $5 than $4. But Jason, again, we're going to get a huge increase in energy prices this winter. Pivoting here, it doesn't seem to make sense, but that's what it's almost like, and we see this once in a while, Wall Street trying to tell the Fed, man, if you don't do something really bad's going to happen. That's why I'm looking at this bond market. This is what scares me the most. The 10-year note, 393. We know on Wednesday, listen, it's supposed to be 0.75 of a point, which would mean the 10-year note would have to be at least 4.5, just pretending has to be 4.5. We're at 3.93, almost 3.9, which is exactly what the Fed's funds rate was supposed to be on Wednesday. It feels like Wall Street is sending a message to the central bank that something is very, very wrong. And man, you better look at this. It reminds me of when Bank of America sent that letter to the Federal Reserve when they started quantitative tightening the first time. What was that? 2016, 2018? I forget when it was.
Yeah, I think it was. I think December of 15 was the first rate hike on that right? Cycle.
And they sent this letter about the quantitative tightening that they were doing, saying, "Hey, idiots, what are you doing? In another few months, where you're going to have to reverse course." Of course, that's exactly what happened. But
the taper tantrum, right? Remember, Joe, is the taper tantrum.
Yeah, the taper tantrum. I mean, the Dow went all the way down to 20,000 on that. Let's not forget.
Yeah.
I mean, I don't know. I thought it was odd. I really thought by today, okay, so they were playing games and I just thought it was an excuse to try to get the market to rally. We'll bring the bonds down, but the closer we get to Wednesday, they would start rising again. And then today we got a 75 basis point hike from the ECB, and even the ECB bonds are down. After a 0.75% rate hike, I don't know, but look at now, it's 3.92 now. It's getting even worse here. I just feel like there's something we don't know. Is it Japan? Is it the UK? I don't think so. I actually think what they're saying is, hey, if you do, the problem will be right here. That's just what I think.
It's interesting, Joe, because you've heard me. I told you by the time this midterm election comes around, I thought the markets will come all the way back to where they kind of just froze at the beginning of 2021, which is 32,000 Dow, 12 or 13,000 NASDAQ and 4,200 S&P, and the Dow's raced all the way back. It's, you know,
the Dow's at 32,000.
But look at the NASDAQ.
The S&P is at 38. The NASDAQ's still just under 11.
But the NASDAQ and the S&P is lagging, Joe. Isn't it interesting how it's just not quite getting back? Does that kind of show where we really are, where it really can't come all the way back? The Dow, maybe is more manipulable.
The NASDAQ's in trouble. You know, we had horrible numbers from Google and Microsoft. Today it was Facebook. By the way, you know what? And I keep trying to tell you to call my son because I have tons of conversations with him and Northwestern Mutual. These guys are on it. 602-909-9048. If you've got money in Wall Street, you need to at least have a conversation with them. Facebook absolutely obliterated today. That their stock price now is under $100. This is the lowest it's been going back to 2016, and I know a lot of these quote-unquote investment guys have put a bunch of your money into Facebook. Here's the funny thing, Jason. So it's absolutely getting crushed, and yet when you look at how many analysts say buy and sell Facebook, you know that there's 40 quote-unquote experts going into the earnings that said Facebook was a buy, and only 16 said it was a sell. Facebook's lost almost 25% of its value in the last 48 hours.
I thought is it Meta now?
Yeah, Meta. But no one knows. If I say Meta, they may not know what I'm talking about. So Meta/Facebook, you guys know what I'm talking about.
It's kind of like a nickname. You can't.
Zuckerberg.
It's like a nickname. You can't ever really shake it, right? You can rename it all you want, but everyone remembers what it is. Well, except for when it comes to who's controlling the monetary system. Those names we don't. They don't like to tell you it's the Rothschilds, the Rockefellers. They don't want you to know those names. But yeah, Joe, I was looking at those tech companies, man, but you jump on that small startup company and you just make a windfall on your investment. But then then it's like, well, what happens? You look at the NASDAQ now; it's just sagging there. It's just not doing.
Well, and that's what's crushed the NASDAQ. Those three big companies, Google, Microsoft, Meta/Facebook, really. Matter of fact, the NASDAQ's down again today
I know.
Because of it. Yeah.
Yeah, it's interesting.
Listen to these guys. I had it as outperform. Now I'm going to call it a market perform. Cutting my target from 205 to 135. It's below 100. Morgan Stanley, they had it at $205 this morning. They told everyone go overweight. Now now it's equal weight and 105. These guys, they're clueless. They truly live in fantasy land. And again, I'm worried about the bond market because the bond market doesn't live in the same fantasy land as the equity markets do. Because like I said, if the bond markets were believing what the equity markets believe, that 10-year note would be like 6%. That would be a healthy market. Right now at 392, I just don't know. It feels like a warning to me. It feels like they're warning the Fed, hey, you're almost at the point here where you're going to break something and break it badly.
We'll just see if a miraculous buyer with a printing machine pops up, Joe, to fix it all. Or to once again.
And the problem is, listen, Jay Powell's Federal Reserve, that's their track record.
Yep.
Right? They've broken things badly. He was the head of the Fed during the taper tantrum. Didn't see it. Remember, he was head of the Fed when he said inflation was transitory. Didn't see it. He's been head of the Fed as Japan, China, the UK, the Eurozone all start breaking down. Didn't see it. And I wouldn't be shocked if they don't see this either, Jason. And like I said, whether they didn't see it or are pretending not to see it, it's still the same thing.
Yeah, absolutely, Joe. Absolutely. So I guess we'll wait to see. We'll see about that rate hike next week, and we'll see what happens. Time will tell, right, Joe?
And again, I'm on record. 0.75% come Wednesday. And the realities are, I'm telling you already, it should be 0.75% and again in December. Now, Is it possible we get 3 quarters on Wednesday and then Jay Powell does the, hey, we're going to slow things down in his press conference and kind of hinting that we're only going to go 50 basis points thereafter? I guess that's possible. And right now, based on what I'm seeing, I think that has to be likely because I think the bond market is warning. If Jay Powell comes out on Wednesday and talks real tough, it's going to be an ugly, ugly, ugly day. If he talks very dovish, then the bottom for gold and silver are in. That's what I'm telling you. We're going to know, I believe we'll know if the bottoms are in after Wednesday's press conference with the Federal Reserve.
Do you think it's possible he just gets really, really quiet and just sort of
it gives no answer?
Kind of sideways.
Says, well,
wait and see. Wait and see.
Data dependent.
Wait and see. I think that's what he's going to do. He's going to just sidestep and just say, well, wait and see. We're going to wait and see. We need more information. That's me. I think he's going to keep it nice and quiet. He's going to try to deflect and say, well, we may have some big decisions in the future. We need to wait and see. That's just what I think he'll do, Joe.
See, I'm curious. I'm stumped here. And again, it's only because of the U.S. bond market. And I know that, Janet Yellen's been talking about this Treasury program. That program's not set up yet. It's not live. It's not ready to go. It's making me a little uncomfortable because what do they know that I'm not seeing? That's what I want to know. Patriot Radio News Hour. We'll be back after the break. 800-951-0592, Patriot Radio News Hour, and gold's up. Gold was down early today, has rallied all the way back here, and is now higher, 1667, and silver's higher as well, 1960, and a huge article. It takes them a while to catch up, but an article came out late yesterday as Bullion Star was reporting that 50% of the deliverable silver on the COMEX isn't actually deliverable at all. And it's one of these weird things. We want transparency in all markets, right? This is why I think it's wrong that the central banks intervene in markets, because you don't get true price discovery. But the realities are, because they intervene, it allows for the markets to be much more dangerous. I mean, that's just the facts. And again, when you look at Wall Street today, it's up over 300 points because they think the Fed is going to start giving in. They have no idea what they're talking about. I believe me, I don't want a recession. I don't want a horrible depression, which is, I think, what we're going to have to get. But believe me when I tell you, that is way better than inflation. I know it's hard, but trust me, this isn't ending. Look at where we're at. I've been warning you about energy. Part of the thing that they got giddy on the GDP, prices were down. Yeah, because we all know gas prices fell all summer. That's over. It was a fantasy. It was a trick. Again, something to prevent true price discovery. Well, they do this in the gold and silver markets as well. They've been counting all of the big investors. Now, some of it's going to be like SLV, GLD, right? The paper gold and silver. A lot of billionaires have their own vaults now. And what's happened was the COMEX says, well, here's all the vaults that we hold our stuff in. They've been counting all of the gold and all of the silver that's in those vaults. The problem is that investors are also allowed to use those vaults. And the story broke last week that both the COMEX and the London Metals Exchange, and they've been, listen, in fairness, they had been doing this for decades. But it wasn't until after the financial crisis that big investors started saying, okay, I see what's coming. Yeah, I'm gonna take some of my cash. I'm gonna take some of my money that I buy debt instruments with, and I'm gonna put it in physical gold and silver. And hey, I'm a super rich guy. I'm gonna put it in the same vaults that the COMEX and the London Metals Exchange use. I mean, and so this is a new thing. And I'll say new in the last 15 years. And then, of course, you got to remember, there was no paper gold and silver with ETFs. That was also new. And again, in about the last 15 years or so. So come to find out, the COMEX and the London Metals Exchange, obviously they knew. And they should do the right thing and say, okay, you know what, obviously it's not all of our gold anymore. But the fact that now they admit to 50%, but somebody, take J.P. Morgan, just themselves. And, of course, why J.P. Morgan? Because they're the biggest player in the gold and silver markets. Do you know at the vaults that they control, 70% of that gold, 70% of that silver is not theirs. And that's a huge distinguishing point. But here's what they were pointing out to. First, they were talking about prices in 2023. They've got gold up almost $200 in 2023. I think that's way too light. Of course, it just depends on how long rate hikes go. But based on what I'm seeing today, that number's light. Silver, just so you know, right now they're expecting silver to rise about $9 in 2023. They've got a target price at $28.30. Right now, silver's at $19.60. They're saying that there is backwardization in the silver market, meaning that the spot price of silver is higher than future prices, which says, hey, demand is very, very strong. But the one thing they know, and we've been doing this, gosh, it feels like for over a year now. They're reporting that all bullion dealers like myself, you've got clean silver eagles, in other words, silver eagles that aren't toned, $10 over spot, that's what we'll pay. You've got sealed cases of silver, call me. Especially, and I want to caveat that, you got sealed cases of silver from the 90s, call me. Call me. You could double your silver holdings if you've got the right years. And they're acting like this is big news. Oh my God, look at the premiums. And of course, I've been telling you, premiums have never ever been higher. And quite honestly, I think they're going to get worse because the realities are the amount of available silver that can be had is at levels really that we haven't seen in decades. And the fact of the matter is the COMEX and the London Metals Exchange have deliberately been lazy and not correcting their reporting to really reflect what the true situation is. And it's just a matter of time. I mean, at $28, does that fix the market? I'll tell you right now, that's not going to fix it. It's not going to fix it. I mean, I think at a minimum, we would need to see silver above $50 before premiums started falling at all. At $28, my fear is the premiums just go higher. Because, you know, look at what it's done with silver falling. Can you imagine the first $10, $15, $20 of silver rising? It's just going to get worse. Patriot Radio News Hour. We'll be back after the break. 800-951-0592, Patriot Radio News Hour, Joe and Jason here. And I know, listen, silver, it's been 2 years of ridiculous paper silver price. And it gets hard, it gets frustrating when people keep hearing, well, when's the move coming? When's the move coming? According to Bullion Star, they won't name names, but here's what they wrote. One of the individuals I speak to regularly who has first-hand knowledge of a COMEX depository's operation told me that they didn't think there's any unspoken silver for left. When it comes to bullion production, they're saying that orders are already out through March of 2023. And again, that's not good. That just means, hey, the mint is saying this is all we can produce, and they've already booked it all the way through March. And all the mints, just think about all the mints out there. Think about independent mints that produce rounds and whatnot. They're like, okay, this is all and all of it already locked through March and getting worse. Here's what they're saying. Of course, I've been telling you this. Nearly every silver round or silver coin, silver bullion like Silver Eagles is at least 4 weeks delayed. We're doing better than that. When you've been around as long as we have, we can get things faster, but, not that much faster, right? We've been telling everybody, hey, 2 weeks. They're saying most items are 6 to 8 weeks. And Jason, I think we're going to be in that 6 to 8 week camp the closer to Thanksgiving. When that mint shuts down, we'll probably enter at that 6 to 8 week period where silver's very hard to almost impossible to come by. Oh, Jason may not be back yet. Jason's actually dealing with customers right now up in Colorado. They're saying that U.S. silver mint Eagle premiums are nearly 100% of spot price. We can do better than that, right? We'll retail them for about 100% of spot price. But again, for a lot of dealers, that's what you're looking at. They're saying there is virtually no price quoted that is too high. You snooze, you lose. And that is exactly, let me tell you, in the silver markets, that is exactly how it's been. And again, this has been a problem for a while. The problem continues to get worse. And I think we're at this point where when the Fed finally decides to cry uncle, silver's going to be, gold's going to have a good year in 2023, but silver could have one of those years where it's up. Right now they're predicting silver to be up about 50% next year. And again, that's not enough. I'm sorry that, if silver got to $28, my guess, and I'm just guessing, you're probably going to be paying close to 50. That'd be my guess. Close to 50 out of Silver Eagle, right? At $28, you'd probably be paying close to $40 to $45 on rounds, $45 to $48 on junk. I actually think for silver to get right and back to normal margins, my guess is, Jason, we probably need to see all-time highs in silver. We probably need to see silver over 50 before the market really got back into balance.
Yeah, and I think if the spot price catches up to where it should be, I think the premiums would actually come down a little bit in percentage-wise. I don't think they're going to come down a lot, but they'll come down. And I can see where you're buying Silver Eagles at $60 an ounce in the short-term future. And then as 2023 moves along, if it's where I think it's going to be, just a grinding bad sideways, inflative, nonsense, you could see silver just gradually go up all next year and just keep going up.
Yeah. Well, and again, that's what I'm saying. Why I say 28's not enough.
It's not enough.
Because I think that just gets people excited, right? The silver guys start getting excited. I actually think that adds to demand, right? As silvers finally start coming and waiting for that big move. And again, I've never seen this. Like I said, I've been doing this 20 years. Never. It's worse than COVID right now, and I just don't know how that's even possible.
It's possible because COVID caused this. This is that market crash that was showing its face in 2019 caused the crash in 2020, which they miraculously just bailed out with a huge, massive amount of cash, which they inflated the whole world with. And Joe, this is just going to keep on going and keep on going. This is, we could talk about kicking the can down the road. I think the can kind of stopped in 2019. Now we're actually experiencing this stuff, and in real time, we're like sloths, those animals that move very slowly, and everything else is moving around fast. It seems like everything's moving slowly on a day-to-day basis. When you focus on it, it's just moving real slowly. But when we talk about stuff from 2008, 2009, 2010, look how fast that moved by us now, right? So it's just slow right now. But if you look at it, it seems like, we had the January 6th emergency in 2021. That was just 1 year after the coronavirus emergency hit us in 2020. Then you had the Ukraine war emergency that hit us in 2022. Joe, there'll be another emergency so that they can blame whatever financial mess is getting ready to happen, Joe.
Yeah, 800-951-0592. $20 gold at $2,095. Listen, premiums have been going up and up and up, and I'm trying to keep it reasonable here. Take advantage while you can. We'll be back with the final segment. 800-951-0592, Patriot Radio News Hour, final segment for all you silver lovers out there. The Mercury Dime rounds that were a few weeks ago, they're landing today and tomorrow, so we'll be calling you in to pick up those. The Buffalo rounds, some of those have already hit, but I've got a little silver special for you, and this is just stuff that I can have next week. It's a roll of rounds, and I believe they're going to be Buffalo rounds, but don't quote me. A roll of rounds and a roll of $50. So you're going to get 20 1-ounce silver rounds and 20 pre-1965 $50 silver $50, $845. And here's the good news, Jason. I can do 100 of them because that's hard to do, but I can get that many rounds right now.
Oh, there you go. And at least we've had some silver to sell. I mean, for a while there, Joe, it seemed like we just never had any silver specials at all.
Well, you know what, though? I put out feelers all over the country, and some people have responded. And here's the funny part. You know what they all say to me? Oh, by the way, this is it. I can get these. Well, most of them responded with, no, don't have any. Call me back. And listen, just like the article said, call me back in 6 to 8 weeks. And then a few days will go by and somebody will reach out, hey, I can get this or that. I buy whatever's there that's available because it just doesn't last. And again, if the London Metals Exchange is saying silver is going to be $28 an ounce in 2023, this is a huge opportunity at $845. By the way, if you have clean silver eagles, and by clean I mean non-toned silver eagles, we're paying $29.50. If you've got sealed cases, call us, especially if you got older sealed cases. Jason, we can do even better then.
Excellent. Yeah. I mean, it's funny, Joe. I've been telling the customers a lot more about how we buy because it seems like there still is a large amount of our percentage of our customers that they don't think we buy. So just to keep throwing it out there, Joe, I had just 3 customers this week. Like, you guys buy? It's like, well, it doesn't do us a lot of good if we can't buy. So we got to be able to sell it to you from somewhere. We got to buy it, and buying from our customers is a great way to help our other customers out, and we buy from our non-customers, Joe. People come walking through the door, they don't know who we are, they're just trying to sell something that they inherited or something, and this is how we get some of these deals that we put out there.
800-951-0592. A roll of rounds and a roll of halves for, well, gosh, I forgot now. I just cleared it out of my $845. $845.
It's a brand new deal. Sometimes it's hard. The numbers come fast, and you get it on the air just in time, Joe. Anybody can stumble over that,
Listen, I can't, and this is the problem. I'm checking my email the whole show. I'm literally checking my emails to see if one of these wholesalers will get back to me with something for us to sell. And that popped up. The market's very weird today. The Nasdaq's down. The S&P is down. The Dow is up. Gold and silver, they're pretty much flat. Crude oil back at $90. It's all about the bond market, though. A major warning, in my opinion, being sent. That 10-year note, 3.92. We're supposed to have a Fed funds rate that's going to be 3.9 on Wednesday. Something's not right. Probably why you need to call and get your wealth protection put away. 800-951-0592.